All right, hello everybody. How are we all doing? I thought I'd do another video today about what's going on in the market, the precious metals world. I do apologize the last couple videos. I know the volume on the recorder it's a bit low, so I'll probably have to check my setup, see if I can get a better microphone. But it'll have to do for right now, I'm afraid. But yeah, just some personal thoughts about what's happening today. A big move in the precious metals, silver mostly, and somewhat in gold today. Actually, let me just pull up the Kitco app here. Let's see. Where do we close? So, silver closed the day at $19.23. Gold went up to $1,546. So a really nice day. And according to this, silver was up 4.3%. You know, really starting to feel like 2010, 2011 deja vu. And I kind of thought we had that potential to do that. So I think that kind of performance will be here to stay. Um, but what else do we have going on? So yeah, I guess we're getting close to that $20. In trading, markets in general, there's kind of psychological levels. $20, it's a big round number. For gold, $2,000 might be a psychological level where there might be some resistance. I don't know if there's resistance at 20. I don't think there is. But personally, what I'd like to say is that I think I don't really want to buy as much over 20. Um, my own stack goals, I'm really there. I I really accelerated my stacking last year. I've kind of met my intermediate goals, so I did one small purchase about a week and a half ago. Grabbed a couple American Silver Eagles, and they were still selling for under $20. And I kind of told myself, if price is going up, I'm not really going to be buying bulk silver over $20 an ounce. Now, if you don't have a position, I don't think it's a bad idea to be adding to your stack at these prices. I think personally, I think $20 an ounce silver, that is cheap. I mean, compared to all the money creation, but I think there's still some risks. I've I lived through the 2011 bubble when that came down, so I know you want to kind of have a risk strategy. You don't want to go all in. Although I did make some moves, the last couple months as we've been going up. I think I made a video talking about silver FOMO and silver panic buying. I did a little bit of that just to kind of hedge myself. Even if the market went down, it wouldn't be the end of the world. But I did buy a 100-ounce bar at a reasonable price, and I was stacking some other types of silver. But like I said, I think my stack's kind of at a place where I'm pretty comfortable with it. So I'll keep stacking. I don't think it's bad to kind of be cost averaging, buying small amounts for myself over the next couple months. But I'll probably just buy coins I like, maybe some numismatics that I'm after. But unless we go into some crazy hyperinflation, I don't think I'm gonna be buying any large quantities at these prices. But really, it's not that expensive. So let's see, what else do we got going on? So there's two things driving the market. You got the Federal Reserve, central banks in general, mainly the Fed. The other big thing, the China deal, which is just a total clown show. I don't know how you guys feel about the China deal. There's no deal. China doesn't want a deal. It's perfectly clear if you have a couple functioning brain cells, as Gregory Mannarino likes to say. They could have a lot of deals. They could do a lot of negotiating, and they could have had these deals for years. So let's not kid ourselves. China does not want a deal. I, I think it's a very low probability that would get any kind of deal to inject some more money into the stock market. Um, Maybe we'll get a trade truce, I mean, these are losing situations. These aren't really bullish um, situations if you have just a truce and we're not accomplishing anything. But and you know what makes it worse is that uh, Trump, he keeps trying to juice the market with these fake news tweets. He's always talking about the fake news. You know, I voted for the guy, but it really is starting to annoy me. Uh, these basically lies, just bald lies that he makes, talking about how the trade deals are going. I really wish somebody would maybe file a report or write up a story on just how often he's tweeting to affect the market. I mean, he does it every other day. He comes out with a fake tweet, oh, the talks are going great, to boost the market. And I mean, that really has an impact. You know, people are trying to trade these markets, and we have the stock trader in chief, you know, giving all this fake news about it. Um, it's just not necessary. And he talks about how, you know, these are private negotiations behind closed doors on these trade agreements. Well, then why are you publicly tweeting about it constantly on a daily basis? He really should have his cards close to his vest, but he's going about it all wrong, and it's not good. And for some reason, the stock market likes it when he does this. Personally, I think it's a very negative thing to see the president tweeting like he has been. I mean, you should be dealing with China mano a mano, not indirectly going back and forth on your Twitter account. But yeah, that's my thoughts on that. Basically, not good. I don't think we're getting a deal. All of that's kind of negative in the short to long term. Uh, and then what else do we got going on? The world economy, you know, that's kind of careening down the hill, shall we say. Another bad report on manufacturing today. There's been a ton of indicators. I mean, the economy's been going down the last year or so. Um, Even the stock market. I mean, we had a huge recovery since January, but you know, I think the mom and pops, the retail investors, they haven't been net buyers. So, you know, whether it's buybacks, you know, the corporations buying back their own shares, or other funds type, you know, doing investing. Um, it's not as rosy as it may appear on the stock markets. Um, Also, you have Germany. They're practically entering a recession. So you got, you know, the United States, China, Germany, the three largest economies. Even Japan, very weak. Things are not looking good for the world economy. So, and we're not an island unto ourselves. That's the other thing. Trump's always talking about how great our economy is, and he's always talking about the stock market. The guy cannot stop talking about the stock market. It really is unbelievable. I mean, if you compare that to like Obama or any other president, it's to a whole new level. And a lot of it's like practically market manipulation. I love how I voted for the guy because he said I was a big fat ugly bubble, and yet here we are. He does everything he can within his power to help the bubble, to grow the bubble bigger. I mean, he literally, will try to release news, you know, right the minute after the market closes. I think all of his aides, the people around him, they know not to say anything negative during market hours. That's all he does. He only cares about the Dow Jones. It's totally insane. That's not what his electorate voted for. So I think he's really way off base when it comes to Wall Street and not Main Street. Um, but yeah, in general, I think the global economy is heading towards a recession, and I think the central banks, they're losing a bit of their firepower right now, um, because another underlying theme of our current situation is chaos. You got Trump leading the United States. He's kind of a loose cannon, and he's kind of disrupting a lot of the Western infrastructure, shall we say. You got the trade war with China. China's another wild card. You know, they do hold a lot of power, them and Russia together. Um, you got problems on the other western ends in the Eurozone. You got Italy. They're constantly threatening to you know, rattle their saber over there and you know, possibly become a real ulcer for the European Union and the banking system over there. Brexit, that's a huge part of what they're dealing with. So you got countries that are pulling out of the EU, threatening to pull out of the EU. So there's a lot of instability over there. And then other large economies that are faltering, and they don't know how to fix the problem. They've had low interest rates, now they have negative interest rates over there. So, and and here's the other problem. I don't think all these banks are on the same page. I think a long time ago, maybe around 2008 and after that, there was a lot of coordination between the banks to boost markets. I'm not sure we have that today with all the nationalism you got in America. Um, we're kind of America first right now. I know everybody would want to have a best case scenario and help each other to grow the economy or to keep it on a strong footing. But I don't know we have that coordination right now. Um, you got other smaller countries doing the same thing. I mean, Brazil is threatening retaliations against France. France is threatening to put tariffs on Brazil over the wildfires. You got large economies like India that are getting close to going to war with Pakistan. Um, like I said, that's one of the themes right now is chaos. So if the economy does start unraveling, markets start going down, I don't think we're at a stage right now where the banks are all going to be helping each other effectively. Um, it seems like there's probably going to be a lot more competition and every man for himself. But we'll just kind of have to wait and see how that plays out. But that's more risk. That's another underlying theme. All that boiling the pot together. That's creating more risk, and all that is net bullish for precious metals. I don't know if that's going to be bullish for Bitcoin. Probably not quite so much. And what could happen out of this? I mean, oh, you had Mark Carney the other day saying the world needs to de-dollarize. He's the current central bank governor of England. I mean, I know he's leaving soon, um, but it's total chaos out there. They're not helping each other. The dollar, it I think they're going to try to weaken the dollar. So what could happen from all of this? You could get another Bretton Woods type situation in the near future. That would not surprise me in the least. Some kind of world accord to help coordinate. It'll come too late. It'll come as a result of huge declines, losses, um, pain and suffering. So it's just going to be a reaction, really. The markets are going to create the the need, and then the bankers, they're just going to react, and they don't have many cards to play. So they're going to be devaluing. That'll be the kind of accord we get. Whether they come up with a basket of currencies to help balance trade, but what do you think is going to profit from that? Gold and silver. So I'm really bullish long term, but in the short term, I mean, we could keep getting fake calls from China to President Trump every day to help keep the bond market afloat and the stock market afloat. But yeah, just some quick thoughts. Yeah, like I said, I'm slowing down my purchases, but we'll see how that goes. What do you guys think? Do we keep marching on through the previous highs where I think a little over $21 in 2016, 2017? That's the resistance level. 20 might be psychological for silver, but I think around 21.50, 21.60. Once we shoot above that in 22, I think the next target from there is really 30, and I think there's a decent probability we'll hit that this year, to be honest. I know it's crazy, but that's the world we live in. Anyways, this has already gone on too long. I'll talk to you guys later. You have a great day.